Europe might be staring down the barrel of another inflation problem, but don't expect the European Central Bank to rush to the rescue. In fact, economists are betting they'll keep rates steady, and that tension is something every investor needs to watch. So, a new Reuters poll just dropped, and it's a big one. It shows economists expect the ECB to hold its key interest rate at 2% all the way through the end of 2026. This is happening even as the risk of higher inflation, driven by rising oil prices, is making a comeback. Now, why should you care about what a central bank in Europe is doing? Because it perfectly captures the trap that central bankers around the world are in right now. On one hand, you've got energy prices creeping up again. The euro has been getting weaker, which makes imports more expensive. And as a result, inflation forecasts for the Eurozone are starting to get revised higher. But on the other hand, economic growth is still looking pretty fragile. Policymakers are terrified of hiking rates too aggressively and accidentally tipping the economy into a deep recession. It's a classic balancing act, and they're walking a very thin tightrope. But here's where it gets really interesting. The financial markets are telling a completely different story. While the economists in the Reuters poll are saying no change, traders in the market are actually pricing in the possibility of an ECB rate hike by July, and maybe even another one by the end of the year. This disagreement, this gap between what the experts predict and what the market is betting on, is a recipe for volatility. Whenever you see a divide like that, you know that sparks could fly. And this isn't just a Europe problem. In today's interconnected global economy, what happens in Frankfurt doesn't stay in Frankfurt. If major central banks like the ECB have to keep their policies tighter for longer because of stubborn, energy-driven inflation, that decision sends ripples across the entire globe. It directly impacts global bond yields. It moves currency markets like the dollar versus the euro, and it can change how investors value stocks everywhere, including right here at home. Everything is linked. So, the next time you see a headline about the ECB or European inflation, don't just dismiss it as foreign news. In a markets this tightly woven together, Europe's inflation headache can very quickly become a key part of the global investment narrative. It's a story that has the potential to move your portfolio, so it's definitely one worth following. Thanks for watching, and be sure to subscribe for more insights into the global markets.